Capital markets. What images come to your minds when you hear the word markets? Do you picture grocery stores, or produce market in the town squares, or perhaps a shopping malls? These are all examples of markets, but you might be surprised to learn that some important markets aren't stores at all. In fact, the buyers and the seller will probably never meet. But our economy would not function the same without these markets. They are capital markets. Capital markets are financial markets that bring buyers, sellers together to trade stocks, bonds, currency, and other financial assets. Capital markets include the stock markets and the bond markets. They help people with ideas becoming entrepreneurs and help small businesses grow into big companies. Financial capital is money entrepreneurs and businesses use to buy resources and supplies. These are then used to make products or provide services. Financial capital is raised through capital markets in two ways: by selling bonds, which are likely loans that the business will repay at a later date with interest, or by selling stocks, which are sold in exchange for the partial ownership of the business. Issuing or selling stocks take place through an IPO or initial public offerings. The amount buyers are willing to spend and sellers want to make determines the price of the stock. Unlike a loan, which has to be repaid, issuing an IPO or going public allows others to buy a share or a portion of your business and become a partial owner. The person or institution with the most share at any time is the company's main owner. Many small businesses conduct IPOs and earn money to become large companies. These companies expand across the country and create thousands of jobs. People will buy stock because they believe eventually the value of the stock will go up. Allow them to sell the stocks at a higher price than the initial purchase price. The risk is that the value of the stock could go down. A company may issue bonds instead of stocks. A bond is a loan investors make to companies or governments. Unlike the stockholders, bonds purchasers are not the company's owners. Instead, they receive interest payments and are repaid at the loan amounts at the future dates. Business issue bonds, and so do federal, state, local governments. Bonds often help pay for the big projects such as new schools, hospitals, stadiums, and road repairs. Without markets for stocks and bonds, business owners would have fewer options to bring their ideas to life or to expand their businesses. They would have to save up enough cash to reinvest. With healthy capital markets, business owners can obtain the needed financial capital to build successful companies. They can also expand their existing businesses to create new jobs and strengthen the economy. Capital markets also reduce the cost of doing business by providing the global economy with reliable sources of cash or liquidities. Capital markets bring borrowers and lenders together in efficient ways to help channel resources to create a healthy national and global economies. They provide essential funding that affects people's lives in many ways, from starting a business to expanding a current one, or providing investment opportunities for people planning for their futures. Capital markets allow traders to buy and sell stocks, bonds, and enable business to raise financial capital to grow. Business also have reduced risk and expenses in acquiring financial capitals because they have reliable markets where they can obtain funding.